If you own a stock or crypto portfolio, you are not going to want to miss this video and full breakdown of the buy, borrow, die method, how the wealthy use stock and crypto lines of credit to avoid capital gains tax entirely. So here's the strategy everyone misses: the buy, borrow, die, but nobody explains the middle part. Buy, borrow, die gets thrown around constantly online. Almost nobody explains how the borrow part actually works. And this is the part that matters right now. No estate planning required. The borrow step is where the real tax advantage lives. Understanding it changes how you think about liquidity entirely. So here's the old way and the problem with selling your portfolio. So you hold an asset, stock or crypto as appreciated, sell for cash. Selling creates a taxable gain, and then exit the position. You're losing that future upside potential. Every time you sell an appreciated position to access cash, you trigger a capital gains tax event. Worse, you exit the position entirely. If the asset doubles again next year, you see none of it. Now, here's the strategy. Keep the upside and skip the tax events. So the three-part framework: buy an appreciating asset, whether it's a stock or crypto. Borrow against it when you need the cash. No sale, no taxable event. Die refers to a stepped-up basis at a state transfer, eliminating embedded gains entirely. So the tool that makes it possible: a securities-backed line of credit, allows you to pledge your shares or eligible crypto as collateral and receive cash while remaining fully invested in the position for the upside. So you keep the upside, you access liquidity, you defer the tax indefinitely. Now, here's the mechanics and how this all comes together, how it actually works. Regulated custody. Shares or eligible crypto go into regulated custody under a control agreement. Custodians include BNY, JPMorgan, Citibank, and Fidelity. Cash advance, no sale. The lender advances cash against the pledged position. No sales required, so no taxable event is triggered at any point. It's a non-recourse structure, so the lender's remedy is limited to the pledged shares, never you personally. No FICO score or credit check required. Underwriting is based entirely on the asset. Now, here's the numbers and the terms at a glance. 500 million plus max loan size. Loans range from 50K up to 500 mil. 75% max LTV on unrestricted shares. However, 30 to 50 on restricted stock. 1.5 to 7% annualized, interest only, usually paid quarterly. Now, terms available at 3, 5, 7, or even 10-year durations, and up to 10-day funding speed, typically 5 to 10 business days from approval to funding. This moves quick if you're on the ball. Now, risk disclosure, the catch: know the risks. This is not free money, and it is definitely not risk-free. Before proceeding, understand what you're actually taking on. Market exposure remains. Pledged collateral is still exposed to market movements. A significant price drop can mean posting additional collateral. Now, for sale risk, in some cases, if collateral value falls far enough, the lender can force a sale of the pledged loan shares. The lender can force a sale of the pledged shares to recover the loan. And then you have ongoing interest costs. You owe interest for the full life of the loan, regardless of what happens to the underlying asset's value. So this isn't tax, legal, or investment advice. Go and talk to your own qualified advisor before taking any action. However, who this is and isn't for. So who qualifies? Accredited investors with genuine stock or crypto position, company insiders holding restricted stock who cannot sell freely, positions with a minimum daily trading value of 30K plus, and a clear or fully disclosed ownership of the shares. Who it doesn't qualify? Illiquid or thinly traded positions that don't meet minimum volume thresholds, anyone not comfortable placing shares into custody for the duration of the loan term. Now, here's your next step. Sitting on appreciated stock or crypto position you don't want to sell, see what it could unlock before you make any decision. So you hold an appreciated stock or crypto position you don't want to trigger taxes on, you apply, submit your position details, no credit check, underwritings on the asset, you unlock access to liquidity in 5 to 10 business days while staying fully invested. So jump over to gapfunded.com/apply and let's go through a full breakdown. The core idea is simplified. The wealthiest investors don't sell, they borrow. They stay invested, access cash, and let time and compounding do the rest while deferring taxes indefinitely. Think Elon Musk in this situation. So you buy, acquiring an asset, stock or eligible crypto, borrow, pledge it as a collateral for non-recourse line of credit, no sale, no tax. Die. Estate transfer. Heirs receive a stepped up basis, embedded gains disappear. This is how liquidity is accessed at the top. Now you know how it works. I'm Mick Wadley. Let's go close something. And if you adored this video, smack that subscribe, flog the bell, and I'll see you on the next one.